Welcome to Friday Takeaway. On the dock is Magni-Tech's share spike and Maxis' lost love affair with Mobile. But first, Alibaba is spending $1 billion on the e-commerce site Lazada, raising its stake to 83%. That's going to have interesting local repercussions since Alibaba CEO Jack Ma has chosen Malaysia for its digital free trade zone. Hong Kong's small cap index plunged this week after margin calls forced the gem exchange's connected web of companies to crash simultaneously. There's some local relevance too, as Malaysia wants to emulate Hong Kong and having a similar junior exchange. It was a Raya-shortened week, but that didn't stop the pipeline of amazing Malaysian news, such as that radar equipment worth millions of ringgit that went missing from a port in Johor. Kind of reminds me of 2008 when we lost 2 fighter jet engines, same time when Prime Minister Dato Sri Najib Razak was Defence Minister. A quick look now at the CI. As at 10:30 am, the KLCI is down by 0.2% to 1768 points, 0.7% lower than last Friday's closing. Year to date though, the KLCI is up some 8%. Next up, some big weekly movers. Magni-Tech Industries Berhad. Well, they're from Penang and they make clothes, and Nike is one of their biggest customers. Fourth quarter profit doubled to 39 million ringgit, helped by a strong US dollar and gushing sales orders. Magni shares are up 80% on a year-to-date basis. Still, two things bear watching. First, they're highly dependent on garment making, and since plastics, their other division is still growing, while forex-based gains are notoriously volatile and extremely unpredictable. Even though Magni is more than a billion ringgit business, no analysts cover it. Right now, their shares are at a record high, but trading at just 10 times current quarter earnings. Maxis Berhad is Malaysia's largest telco by subscribers and controlled by the businessman Ananda Krishnan. With a 42 billion ringgit market cap and still decent user revenues, Maxis is a staple index holding yielding 4+% in dividend yields annually. Here's where it gets a little hairy though. Mobile has ended its network sharing agreement with Maxis prematurely, which Kanaga estimates will cut Maxis earnings by as much as 5% over the next 4 years. Analysts said they weren't too surprised by the move though, given Mobile's efforts to build their own network. Year to date, Maxis shares are down 6.4% and negative 0.5% in 2017. Of 26 analysts covering Maxis, 13 say hold, 8 say reduce, and 5 say sell. Average target price is 5 ringgit 62 cents, which is where Maxis is currently trading at.